Are you tired of feeling lost and overwhelmed by the stock market? Do you find yourself bombarded with confusing jargon, endless data, and the constant pressure to chase the next big thing? Imagine a simpler, more intuitive way to invest, one that leverages your personal experiences and knowledge. This is exactly what Peter Lynch, one of the most successful investors of all time, advocates with his famous principle: invest in what you know. By the end of this video, you'll discover how Lynch's straightforward yet powerful approach can transform your investment strategy and boost your confidence in the market. So, if you're ready to learn from the best and make smarter investment decisions, stay tuned. Who is Peter Lynch? Peter Lynch is a legendary figure in the world of investing. During his tenure as the manager of the Magellan Fund at Fidelity Investments from 1977 to 1990, Lynch achieved an astonishing average annual return of 29.2%. Under his leadership, the fund's assets soared from $18 million to $14 billion, making it the best-performing mutual fund in the world. His success is not only a testament to his skill, but also to the effectiveness of his investment philosophy. The philosophy: invest in what you know. At the heart of Lynch's approach is a principle so simple, yet so profound: invest in what you know. This concept is built on the belief that individual investors can gain a significant edge by focusing on industries and companies they understand. Here's a closer look at why this principle works and how you can apply it to your own investing. Familiarity breeds insight. Invest in what you know is powerful because familiarity breeds insight. Lynch said, "The best stock to buy is the one you already own," meaning companies you encounter daily can be great investment ideas. For example, working in healthcare gives you first-hand knowledge of innovative medical device companies. Similarly, using a popular tech product might highlight a promising investment opportunity. Personal experience as a guide. Lynch's philosophy encourages investors to use their personal experiences as a starting point for research. He once said, "Know what you own and know why you own it." This means paying attention to the products and services you use and love, and then investigating whether the companies behind them are financially sound and have good growth prospects. For instance, if you notice that a particular restaurant chain is always packed and expanding rapidly, it might be worth looking into their financials to see if it's a good investment opportunity. Your personal experience can be a valuable tool in identifying potential winners in the market. Avoiding the hype. A key aspect of invest in what you know is avoiding market hype. Lynch advises against following trends or chasing hot stocks, urging investors to rely on their own knowledge and intuition. He cautioned, "You get recessions, you have stock market declines. If you don't understand that's going to happen, then you're not ready." Focusing on what you know helps you avoid speculative pitfalls and make informed, rational decisions, protecting your investments from market volatility and unpredictability. Practical application of Lynch's philosophy. Let's explore some practical steps you can take to apply Lynch's invest in what you know approach to your own investing. Step 1. Identify your circle of competence. Start by identifying your circle of competence, the industries and companies you are most familiar with. This could be through your profession, personal interests, or everyday consumption habits. Make a list of these areas and consider them as your initial pool of potential investment opportunities. Step 2. Conduct thorough research. Once you've identified companies within your circle of competence, the next step is to conduct thorough research. This means looking at their financial statements, understanding their business model, analyzing their competitive position, and assessing their growth prospects. Lynch's approach doesn't advocate for blindly investing based on familiarity alone. It's crucial to do your homework and ensure the company is fundamentally sound. Step 3. Monitor and reassess investing is not a set-it-and-forget-it activity. It's important to regularly monitor your investments and reassess their performance and prospects. Lynch advises investors to stay informed about the companies they own and to be prepared to act if the fundamentals change. This ongoing diligence helps ensure that your investments continue to align with your knowledge and expectations. Quotes from Peter Lynch. To further inspire and guide you, here are a few timeless quotes from Peter Lynch. "The person that turns over the most rocks wins the game." and that's always been my philosophy. Everyone has the brain power to follow the stock market. If you made it through 5th grade math, you can do it. The simpler it is, the better I like it. Conclusion: Peter Lynch's invest in what you know principle simplifies investing by focusing on familiar companies. Leveraging personal experiences and combining them with thorough research can give you a market edge. Look around you for potential investment opportunities, as the best ones might be right under your nose. By investing in what you know, you're investing in your own success. If you found this video helpful, please like and subscribe for more investing insights. Stay tuned for more tips and strategies to achieve your financial goals, and check out our other videos. Thanks for watching. Raise your IQ with cutting-edge info, insights, and analysis. Visit and subscribe for free at the link below.